The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. I was just listening to Mick Jagger as I was coming on the air, and I have to share this funny story with you from my days at the Merck. I lived at McClurg Court, which had a really good health club. It was really quite nice. And in the afternoon, there was never anybody there because people were working, and we would be done by 2 o'clock in the afternoon. So I was always going over to the health club, and I was sitting in the jacuzzi. It was Paul Revere and the Raiders. Well, I'm going to tell the story anyway because it was about Mick Jagger. What do I know about rock and roll? I just listened to Elvis. Anyway, I went into the jacuzzi. There was a fellow there, had all kinds of gold jewelry on, and I could see he had a towel sitting next to him, and there was inside the towel. And what happened was they're telling me my mic is coming out, but I don't know why. I'm just going to have to do the best I can. I tested everything before. Anyway, I was sitting next to this fellow, and I looked at the towel, and inside of the towel was a huge handgun. It must have been a .44 Magnum or something like that. And I looked at him and trying to make fun of this, or make light of the situation. I'm not in any danger of getting whacked, am I? And there was a guy swimming in the pool, and he said, "No," he said, "You're fine." He said, "I'm just a bodyguard." And I said, "Okay." Folks, it was Mr. from the A team, the guy with all the gold jewelry, and he was guarding Mick Jagger. That was his job. And Jagger was in the health club 3 or 4 days a week, and he would go into the health club just like everybody else into the steam room. And what was amazing to me is, boy, he was skinny and warm, but boy, he was solid muscle. I was really in shape. So anyway, that's my only experience. Never spoke to him or anything, just saw him hanging out there. So those are the last memories. Okay, now we'll get to something that I don't understand, and that'll be the stock market. I posted into the TFNN, in the Tiger room here, the chart of the Bradley stock market model inverted, because that's what it looks like, that it's, getting ready to, looks like it's going to be topping somewhere around the end of November, I guess. Art Cashin had a really interesting commentary on Monday about the last 4 days of October being the 4 most positive days of the year on a historical basis, and it's certainly going to be true this year because we've had a big run. The Dow is being affected a great deal by the market, by the Visa and MasterCard. I think that's more than 50 or 60 points in the Dow Jones, as I heard earlier. Could even be more because they're very high price stocks, and that could be the same situation going that we got running. Now, I think that what's important is that we not just look at the Dow, but if we look at the New York Stock Index, which is the one that I follow most of all, is the NYSE, because that's the best. And it is still setting right at the 61% retracement of the high that we made back in September. It hasn't taken out the high. It's setting there almost exactly at that high right now. All the others have gone above the 786 levels. It's already trading above the 786 retracement of that move. The NASDAQ, I believe, has just about to double top. The S&P has gone above the 786 retracement. So all of that reinforces, the positive nature of the market. However, the NYSE is still in to do, what we think is going to be a very interesting next few weeks. The good part of this is that we're having fabulous volatility. You just can't ask for any better volatility than we're having in the market at the present time. It's just really, really spectacular. And even the grains have started to jump up a bit, and that's another why the markets are so interesting, is we're starting to see really good swings both up and down, and that makes it a very, very interesting situation for sure. Now, before we far along into the commodity department, I wanted to share with you what I think is going to be a very interesting prediction. I feel very strongly in this, and we'll see if it's going to be correct or not. But what I'd like to do is to post into the Tiger TV today the work that Shane Smolian did, who is a co-author in our new book that's coming out sometime in early December. This is the combined transits for October, November. We talked about this. The green lines are when you have positive energy, and when you have the red lines below the center line, that's negative energy. And as you can see, starting today, actually it starts on Saturday, but at the end of this month, we start with a negative bias all the way through November 13th. So this will be an indication that we're going to close higher in October. That looks like a foregone conclusion with the Bradley model pointing up, and with the markets above the 786 and looking very, very strong. But come the first of the month, we're going to see if we have this 2-week period that could be, pretty significant to the downside. Remember, stock markets are there to confuse you as much as possible. They certainly do a good job, especially from my point of view anyway. Once that bottom was hit on October 15th, we had all those ratios coming together and all those different indices, and especially the NASDAQ hitting the exact 618 of the February low. All that told us with a high degree of probability that we were going to get a pretty good rally, and in fact it went a lot higher than this old dude thought it was going to. So we'll see if it's going to continue to do that. Now, I was listening to Basil as I try to all the time, just to get a feeling for what he's looking at with the VIX index, and I agree with him 100% that we had that big run up that looked like an island. It stopped right at a 1.618 expansion of the number that we had just about a year ago. That was almost, in fact, it hit it right on the exact tick. It was 3120. That was a 1.6 expansion of the high that we made back in December in the VIX, and now we've come all the way back down. So all this VIX index is telling you is buckle your seatbelts, cowboys and cowgirls, because we are getting ready to rock and roll. This is going to be really, really wild. I mean, we're going to see some really big swings, and when you start seeing triple digits in the triple digits on the upside looks really good. Triple digits on the downside looks really bad, but get used to it. This is how markets, make these big transitions. They make it real easy. They don't go up there and say, hey, this is the top or this is the bottom. They usually, scare the living daylights out of you. So that's the key to keep watching. So the interesting thing is that the VIX came down. I mean, can you realize this thing tripled in value and then came down more than 70% of it, 78% of it? That's fabulous volatility. This is really, really good. Now, whether these markets continue to go, straight up, I do not believe that. And the reason why I don't believe that is because of that massive distribution that we had in the New York Stock Exchange Index in July, where we had the divergence, where the New York Stock Exchange could not make a new high. We had the same thing happen with the situation on September the 3rd, which was the anniversary date of 1929. And now what we've done is we've rallied back to the 61% retracement, coming into the really key level here of the 1st of November. Now, this would set up, perfectly for a really, really sharp move. Remember, markets that can give you everything you want on the upside are certainly capable of taking everything you want, taking everything away from you on the downside. You've got to remember that. So this is going to be really interesting coming in Monday because of the setup that's occurring. Now, I wouldn't be surprised to see the Dow make new highs, which is up another 100 points from where it is right now. The NASDAQ certainly could make new highs, and I think the S&P can make new highs, but I do not think the New York Stock Exchange Index is going to make new highs, and that would be the third divergence that we've had over the past 5 or 6 months. This, to me, still looks like massive distribution. I mean, it really does. I can't see it any other way. I know I might be wrong, but, so goes the story of the game. Who knows? I'm going to switch over here now to get this commodities, folks, as we've got some really interesting situations occurring. We're about ready to take the last train from Boot Hill here in the gold market. I'm going to start out with the XAU index because we are now trading below the 1.618 expansion of the last 2 years. And I believe that that's either going to have to stop right here, which I don't think it has a snowball chance, and to do that, but it still has a very, very slight chance of turning here. And I doubt it because of the fact that it gapped down and it had a big move to the downside. In other words, a very long-ranging bar. We're trading below the by a few cents right now, but I do not think that this is going to hold, mainly because of that long bar that we've had today with the gap down. We've also had very, very bearish action coming in silver. At the same time, we're below quite a bit. We're more $1 below $17 an ounce in silver, and gold has already violated the 786 retracement of that move that we had, just over the last few days. It's certainly tried to hold that up, and in fact, it has been very been unable to do that. Let me put up the. We got to have a break here pretty soon, but I still think we have time to put up the silver to take a look at this because that's a big part of it. And you'll see that we have some further targets coming down here. Another $1 or so an ounce in silver. That's around that $15, which is that long-term weekly low that we've talked about here many times. And we'll see what's happening. I'm getting complaints that we're having a really bad connection. I really have really expensive headphones and everything, so break here. I will double check this to see what the problem is. I don't know what it could be. It could possibly be internet corrected, but I don't know. I will. I'll see if I can do that over the break up to try to get it fixed. But I double checked this 5 minutes before the show, and it was working properly. But evidently, it is cutting out. If you have any questions, it's 877-927-6648, and we will try to get that. I don't think this is the time to buy the metals. You might be able to buy them later, either at a lower price or a higher price, but I can't buy them here. They're breaking down badly, and they're doing it with really wide ranges to the downside, and that tells me that they're most probably getting ready to go lower. And we'll see if this is going to be a big problem. I've tried to get this working, but we'll see. So we're going to take a little break here. We got the Dow Jones up thanks to Visa and MasterCard, and we'll see what happens. I'm not using AOL. We'll be back on this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks. Hope I'm back. I don't know if the sound is going to be any better or not, but I did some changing a little bit, and we'll see if it's going to help at all. Hopefully it will. But you never know with computers. That's the problem. All right. The next chart that we've had a request to take a look at the chart of Facebook. And so we're going to put this in here today and let us take a look at it to see what's going on. As you see, this is the chart going back several months in Facebook. And as you can see, we made the first three drive pattern at 0.3 up there. And then since that time, we've made the 1, 2, 3, 4, 5 expanding triangle. This was the T6 pattern in H.M. Gartley's book, Profits in the Stock Market. It's one of his most bearish patterns of all, with the highest probability of any of the patterns that he looked at. And as you can see, we're down about, not quite percent, about 8% in Facebook based on this particular pattern. Now, we came very, very close to the 786 retracement of the low we made back on October the 15th, but that still has not happened. We have that big gap in there, and I'm not sure whether that will be filled or not. It could easily be filled if the market, continues to go higher. But my personal opinion is, based on what we talked about earlier in the show, is that we're going to finish up this month. It's going to be almost impossible for the stock market to get hit very hard on the last day of the month, coming into an up month in an up week. That's going to be really tough. The last day of the month, there's always window dressing, and also it's Halloween, which is known as trick or treat. So that would be a really nice trick or a really nice treat, depending on how you want to, take a look at it. So we'll have to wait and see how this, how this looks. But frankly, we are ready to lock and load coming in Sunday to start selling, unless this market is really, really strong, and take advantage of what we think is a 2 or 3 week move to the downside. These aspects that Shane has worked on over the past years here, we've been doing those for about 2 years now with the book, have shown to be really highly accurate, and along with some of the technical things that he looks at, it appears that, we were thinking that we could be coming down hard into the 20th of October, but after that major bottom on October the 15th, that was right on the Bradley date, that tells us that we're probably, getting ready to have another tricky type move up here starting November 1st, if that is in fact the case. In fact, one of the things you might want to think about, if you're a person of intelligent risk speculation abilities, you might want to look at an out-of-the-money put in the Dow Jones Industrial Average, say a January 16,500 put, something like that is not going to be too much of a problem. Now, those of you that have an interest in Shane's work, it's www.wolftrader.net, I believe, and it's either .net or .com. Pretty sure it's .net, and he has some really good information that he shares with the folks, and he's really a fine young man who's incredibly smart, and boy, he knows computers and astrology at the back of his hand. I was very fortunate to his acquaintance a few years ago. He works closely with Alfie of Air Software, who also gives a great deal of information on this stuff, and it's really an important part of the statistics that we're looking at. This is just really statistics, folks. None of this stuff is etched. These are only probabilities that you try to get on your side. Nothing more, nothing less, and is really quite interesting things to look at. It's if you're interested in the website, I'll spell it out: www.wolftrader. That's WLFTRADER.net. Wolftrader.net, and it's Shane. And he's be happy to answer your questions, I'm sure. But anyway, it's got good information. It's all statistics. We've tested it back for a very, very long time, before we put our names on a book. And, it's just really interesting. And you remember, all this is based on, not risking very much. Keep your losses small, keep your losses small, keep your losses small. That's the key to this, because you can be right a whole lot of times and still be you can be wrong a whole lot of times and still make money. And the also thing is that you can be right a whole lot of times and still lose money if you do the money management the wrong way. That's the wrong thing. Perfect example here is the baseball. We just finished the World Series here, and frankly, these ball players, they hit 350, they are superstars. They make $20-50 million bucks. At our business, if you hit 33%, in the poorhouse most of the time. Okay, we've got to take a break here with the Dows. We'll be back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I've posted the chart for the daily chart for gold. And as you can see, over the last 18 months, we've come down to this $1,180 a barrel level. $1,180 per ounce level. I've got crude oil on my mind because that's coming up next. And looks like we're ready to break below it. Again, really felt that the third bottom was the most important, that if it broke the third bottom, that the market was going to have a big move to the downside. And the last leg that we had, the gold here, from the late September to the middle of October, just a few days ago, was 382 retracement. That takes gold down. If you just looked at that swing, that takes gold to about $1,000 an ounce, and we could certainly, see a big move that to the downside. Because remember, on the weekly basis on gold, I think we can get this up without too much trouble. To take a look at it, you'll see that this is really a very, 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 very important bottom, because it was a 61% retracement. Yeah, there we go. We can see this real easily here, and we could easily break this to the downside, and that sets up much, much lower levels in the gold market, the market to move down. So we'll see if this is going to be the case. Give me 1 second here, and we will get this ready. Hopefully it'll be in my lifetime. Maybe not. No, I guess I'm not going to do it. Yes, I almost was able to. This reminds me of that commercial with the lady with the trying to buy the purse. I'm just going to post it the way it is because it's close enough to what I wanted to show, because we're so close to this Fibonacci level of 1180 again. Just another down day in gold would be the same thing, but that sets up price at levels down to about at least 960 in gold, another 20% lower than where we are now, and that's no indication that it's going to hold either. The 61% retracement actually held, back in 2000. We had a $200 rally, and then it hit again at the end of 2013. We had a $150 rally, and then we had it again in 2014. This time the rally has only been a 382, very, very minor. So this tells us that we're most probably heading, we are heading lower. I don't think there's any, there's always a question, but that's what it looks like is happening with the gold market, that it's breaking down, and we are going to break. When you look at silver, it's not going to give you much help unless the XAU, the gold silver index stock, right where we were trading earlier today at that 69 level, then that's not going to give you much help either. Remember, when that XAU broke 98 to the downside, that was telling you that it really wanted to go a lot lower, and it's down over 40% just in the matter of the last last 6.5 weeks. So this is market. It's under a great deal of pressure, and we continue to go lower. So I would assume that this is what is going to be happening, with gold. We're going to have lower prices. If we close below 1180 tomorrow, being the Friday like this, or early Monday morning, you're going to see a pretty big move to the downside. On the second part of this is if it does hold, then I've missed a great buying opportunity near the lows, but it'll give us plenty of time to get in, believe me, because there's a lot of people that are short this, that are having a great deal of fun, and the market is very, very oversold. But the $64 question is whether it's going to continue to be that way over the next few days. So my suggestion in gold is to keep your powder dry. If you're long, God, please put a stop in there somewhere, because there could easily be a cascading catharsis, washout to the downside, which you really don't want to. You don't want to have to go through that. There really isn't. There's just no reason to do that. I had an interview this week with a brilliant edition of the Wall Street Journal, that same type of magazine, and one of the things they went into was how to use risk control on your trades, because you don't know whether you're right or wrong. You never know that, and all you can do is to pick the best possible scenarios that you can for being a buyer or seller, and then allocate your risk, appropriately. With the hedge fund, we try never to risk more than 0.5% at any one time. It's a considerable amount of money, but on a percentage basis, it's not very much at all. And if you can make 1 or 2% on that risking only 0.5%, that's a very, very good return, because you're not taking any extreme risks in the market. That's the whole problem with some of these people that are doing these. I guess you'd call them ETFs or hedge funds, not hedge funds, but ETFs and things like that. Is that they don't give you any parameters because they have no skin in the game. They don't have any of their own money in it. It's a big difference, because they can scale down buying. It's the old adage: you buy low, buy low, and pretty soon it's buy house, good buy car, good buy boat, good buy wife. And you don't want to get into that. Now, next market I want to get into, because we're going very quickly today, thanks to all the call-ins, and we're going to take a look at the market for crude oil. We are setting right at nearly a double bottom. We're only $2.50 away. I believe we're going to make that level of around $7 a barrel here very, very shortly. And that's going to be a real interesting spot. Two reasons. One is that CNBC, the very famous financial organization that we listen to all the time or see it all the time. Not everyone does, of course, but they are really promoting the oil at $80 a barrel. The fact that it is, going to go a lot lower than that. In fact, they're promoting $80 a barrel oil when it's trading at $81.50 and $82.50 yesterday. So that was really an amazing situation. One other word of for historical note, I passed a milestone in my life yesterday for the first time in my adult life. Well, actually, since I was about 6 or 5, I guess. Well, never been an adult. Ever since my early childhood, I didn't know who won the World Series until just a few hours ago. We were traveling, and I forgot, and not have any teams involvement in it or anything, but I do like to watch the World Series because of the quality of the play and everything. But it's the first time that had ever happened. Because I've always enjoyed baseball, but unfortunately I did miss the series, and I understand that San Francisco won. Well, God bless San Francisco, and God bless, I guess it was Kansas City, the city for actually being in the series, which was really good. So we'll see what happens. Anyway, we want to wait here in crude oil. Natural gas. Gasoline prices are still dropping. We had gas at $2.87 a gallon, which is low as we've had in 4 years. And I think that we're, if we get much lower than $75 a barrel, actually $76 a barrel in oil, we could make 65 or 50. Dennis Garp, who writes the Gartman letter, he's one of the frequent people that come on to CNBC. I traded with Dennis when he was on Florida Exchange way back in the 80s. That's 1980s, not 1880s. And he is quite a young fellow, and he is saying that oil is going to $10 a barrel. And it's been there before. It was there after the Iraq War in 1991, and it could very easily, go down to that level, I guess, one more time, especially if Elon Musk comes out with some cars that are affordable. It can get more than 100 miles to the gallon. It's to the kilowatt, isn't it? Well, whatever it is, that would make it good. I still can't have a hard time driving a car that doesn't make that cool sound that I've loved since I heard the first car that I ever owned back in 1956. And I certainly was on a 49 Mercury, and it was really a nice car. I still wish I had it. It'd probably be worth a fortune. I don't know if you folks know this or not, but you think the stock market has been bullish and some of these other things, but the biggest bull market over the past decade has been antique cars. They have gone absolutely through the roof, what some of the prices are. It's not uncommon now to see cars that are worth $10 million, and, that's doesn't happen very often. I wouldn't be surprised if they came out with an antique car futures or antique car ETF. That would be a good thing to come out with. I better tell BlackRock about that. I might make a commission on giving them that idea, because if there's action, put a ETF together. So we'll see. Okay, one other question that someone asked me about. They asked me about the stock of Apple, and Apple has made that same type of pattern that Facebook is. If you give me just a slight difference in the Facebook chart, then I'll get back to the commodities after we did. I want to do the grains, but since we had a request on Apple, I wanted to bring it up here and show you folks what it looks like here. All I have to do is to refresh it, and we should be in shape. Oh, if it's going to refresh, therein lies the debt. Well, unfortunately, anyway, there's a lot of resistance at that 106 level in Apple. I want to go to the grains now, because we have had some interesting phenomenons happening. We actually had a rally in the soybean here. We had a rally in wheat. We've had a rally in corn. They've all stopped at major spots on the move here. Soybeans stopped at the 61% retracement from the August high. Wheat stopped right at the 786 of that level, and corn stopped at the 61% retracement of that level. All of those are, getting ready to turn down. This is the first really good rally three weeks. It's the first good rally that we've had in grains in a very long time in a market that has been extremely bearish and continues to look bearish by all any way you look at it, trends or whatever. Longer term is down. Everything has been pointing to the downside. So all of that tells us that we are looking to be much lower in prices here down the road, and we've got harvesting starting now. So that's going to add some pressure to it also. The last one I wanted to put in here was to take a look at the wheat market, because it's also in a downtrend, and it's the first really good rally we've had since July, and that's stopping pretty much right at the 61% retracement of that same move that we were looking at once before. That'll be the main thing. Now, I've had a request to take a look at the DAX index, which is the German equivalent of the. Let me get this ready here. I'll show you of the S&P, and it is very, very heavily traded, especially at nighttime, because those folks wake up when we're still asleep. And give me 1 second to refresh the data here off the laptop. Folks, I spent a few extra bucks, and I bought a, oh dear, why is this not, well, it still shows the number that I want to see anyway. It's just not updating the way I want to. Solid state laptop. This is different than most laptops because it's quite expensive. It's about 4 times the cost, but oh my gosh, the way that it works is so fabulous that you would not believe it. I mean, it's just literally so fast. I used to have to wait for Windows to come up or any program to come up. Just touch a button, and boy, it's right there, and it's really a good thing. Anyway, we're making a retracement in the German DAX index. We're making similar retracements in the FTSE and all, which is the London, and then also in the CAC, which is the French market that I don't know many people that trade it, but those are the ones that are still doing it. The emerging market, EME, still looks very, very bearish, so none of that looks like it's we're starting a major leg up here in the market. I just think we're going to be we'll see at the thing. I'm going to be on most of the time. I will be on TFNN while I'm traveling. We've been invited to go to Sydney and Melbourne and Auckland and Singapore to speak at a private bank for some traders. And so I'll be doing that for the next 10 days, starting in November the 8th to the 18th. November the 8th. 18th, and but I should be on as long as we have an internet connection, which I think Australia has electricity and stuff. I know they have water. I'm not sure about Australia about the electricity. Oh, they have to have electricity, sure, because they have movies, and movies run on electricity, so that should be good. Should be no problem. Anywhere in the world you go to, we'll see what happens, and I will check the connection here to make sure that everything is really good, and we'll go from there. Okay, we're going to come back, and I'm going to review what I think is happening in stocks, and then we'll wrap it up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks, back, and I'm going to post into I've already posted into Tiger TV the chart of the New York Stock Exchange Index that shows these two major divergences that occurred back in July and in September. Those had never occurred before in the history of the market, but frankly, back in 1929, we only had the Dow Jones Industrial Average. There was no S&P 500. The NASDAQ didn't come out until 1972, so there's really no way to look at it. But over the recent history, over the last 100 years, we've been able to see some of these, and this is really, actually not 100 years, but the last 60 years, since the late 40s, we've been able to see this, and over the last 60 years, we've never seen a divergence like this, where we've had higher highs in the stock market with the S&P and the Dow and the NASDAQ, but the New York Stock Exchange Index, which in fact is the largest and the broadest base, is not be able to do that. And if we don't go higher by Monday, this could be the third particular one. Now, folks, we've been straight up now since October the 15th. We've had one minor down day that really had a higher high, closed a little bit lower, and then gapped up. But we've been straight up for 10 or 12 days. That also makes it an outlier event. And, I found that every time you start to buy into strength or sell into weakness, that I should send my checks directly into the Chicago Mercantile Exchange, because those never work for me. So my strategy is here. We're going to know Monday, I think, but I'll be looking to sell either sometime Friday, based on the patterns that I look for, or very early Monday morning or even Sunday night possibly looking at that. But I will be gauging this NYSE index as part of the parameters, because if we should close higher tomorrow because it's an up week and an up month in an up year. So it's going to be hard for the market to go down just because of window dressing in the last day of the month. But starting the first of the month, much like we did in September and also in October, we could come in with some more selling. So this is not a time to be buying. You've had this really straight up move, and I believe it's short covering. Folks, if you look at the chart really closely, it looks exactly like the one from 1929 and like the one from 1987. I mean, they both had 10-day rallies into a 61% retracement. But the problem is that the Dow and these others are, still need to go higher. The Bradley model has inverted, it's going up, but folks, remember that Bradley model can change on a dime. So you've got to be respectful of the patterns and the Bradley model. So if it's right and the Bradley's right, this thing is going to go through all these numbers where we are right now, and we're going to be up into Tuesday and Wednesday of next week, and that will tell us that, yes, all of this is not working. We'll probably be going up another couple of weeks into the 22nd to the 24th of November. We'll have to wait and see. But certainly not buying here is not the right thing to do, not after 10 days up. So that's the way I view it, and we'll see if that's going to be the case or not. But I'll be looking sometime on Friday, Monday at the latest, to be trying to get short up in here in the market for another really strong leg down into that November period. And then if it comes down in November, the Bradley would be right again. So that's the problem. The Bradley's really good with the dates, and when it follows look at October 15th, 16th was right spot on, when all those ratios came together, and that's when the market turned. There certainly wasn't short down there. It was a place to be at least covering your shorts down at that level because of the fact that where it was at that 618 retracement on most everything. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.